Okay, Assalamualaikum warahmatullahi wabarakatuh. So today I'll do a recording on this topic, plant and intangible asset. Um, so this is chapter 9 of the textbook. So what is a plant and plant asset as a stream of future services? So in your balance sheet item, you'll see that you normally have your cash, your balance sheet item under your asset. You normally have your cash, all right, and then you have account receivable, and sometimes you do have buildings, tools and equipment, motor vehicles. So these are the what we are referring to as your plant asset. So it represents a bundle of future services and can be thought of as long-term prepaid expenses. So it means that you pay now for the asset, but you can use the asset for a number of years in the future. So the cost of the plant asset is an advanced purchase of services. So it means that the service of the asset that you can use for a several number of years, but now you pay for it now. So as year pass and the services are used, the cost is transferred to depreciation expense. So there are major categories of plant. First is what we call tangible asset. These are your long-term asset having physical substance. Example are your land, buildings, your equipment, furniture, and features. We also have what we call intangible asset. So this refers to your non-current asset with no physical substance. Yeah, so it means that you can't see it, but it's there. Huh? Right? No physical substance. For example, if you acquire a patent, copyrights, trademarks, franchises, or even goodwill. So these are your intangible asset, which is also will appear under your balance sheet item. Then we also have natural resources. So this one is more relevant to company that involve in extracting natural resources. For example, Petronas, Shell, and BHP, all those. All right. So these are the sites acquired for extracting valuable resources. For example, oil reserve, timber, other minerals. So it could be on land, it could be under the sea. So it depends on the type of the natural resources. Okay, so these are the most important part, all right, slide in this under this topic is the accountable event in the life of your plant asset. So when you talk about plant asset, all right, in your business, you must first acquire the asset. So upon acquisition, you have to know what are the uh, business transaction that have taken into but that have taken in place, and then how to record those acquisition of asset. And remember that the asset will be used for a number of years. So you have to recognize to allocate the expense, all right, on the cost of the asset over the years, over the asset useful life. So for example, if over 5 years period, how are you going to record the expenses? And this is what we call depreciation, all right, related to the asset that I have used. So again, depreciation here means that the asset, when you first acquire, and when after 2 or 3 years, the value of the asset will not be the same. Yeah, because there are some costs that is generated. For example, the depreciation expense, all right, that will reduce the value of the asset. So we're going to look into how to record those depreciation. And finally, when over some time, maybe you want to sell or you want to dispose of your asset. So what would be the accounting recording that you have to do um, in order for you to record for the disposal of your asset. So let's look into the example here. All right, first we are looking into the acquisition of asset. In example, in your textbook, for example, here we have, before that we go into acquisition of plant. All right, so when we talk about how you decide on the cost of the plant, so the cost is not only the price of the asset, but also include any reasonable and necessary cost incurred for getting the asset to the desired location. For example, this is your transportation cost, for example, yeah, transportation or insurance costs to bring the asset to the location, and also the cost incurred for getting the asset ready for use. For sometimes you have to incur additional costs such as installation costs, right? Sometimes you have to pay for some kind of renovation cost, all right, repairs first. For example, if you purchase a second-hand motor vehicle, so sometimes you have to repair the engine, repair the condition of the motor vehicle, repair for the air condition, for example, so that then only the motor vehicle can be used. So all these costs will be added, all right, in arriving to the cost of the asset upon acquisition. Okay. And then there are special consideration in the case of land. All right, when you acquire land, there are other costs incurred, for example, cost of real estate commission, the escrow fees, the legal fees, the cost paid for clearing and grading the property. So all these costs is added into the cost of the land. In the case of land improvement, for example, once you purchase the land, but then you incur additional costs, for example, for improvement, driveways, fences. So this cost has to be recorded separately. So the first one is together is the cost, but this one will be recorded separately upon purchase of the land. In terms of building, all right, for example, the cost incurred for remodeling prior to the building being put into use will be part of the cost. In terms of the equipment, however, yeah, the related interest, for example, you have to pay for the interest, you take a loan for the equipment, so the interest on the loan or the insurance or the taxes that you have to pay on the equipment will be treated as an expense. Yeah, expense incurred for the equipment. So this one will be separately. It will not be part of the cost of the equipment, but it will be treated as an expense incurred in the current period. And then we also have the allocation of a lump sum purchase. Total cost must be allocated to separate accounts for each asset. So for example, if you have motor vehicle 1, you have motor vehicle 2, motor vehicle 3. So all this has to be recorded separately at the fair market value. Yeah. Depends on whether it's a cost or the fair market value. So then you also have this where we talk about capital expenditure and revenue expenditure. So capital expenditure is any material, all right? A material, we are referring to a significant amount of expenditure that will benefit several accounting periods. So normally when you acquire, for example, an asset, so these are capital expenditure. Why? Because the benefit from the asset will be for a several number of accounting period. So when you have incurred these kind of expenses, we call it as a capital expenditure. So to capitalize an expenditure means that to charge it to an asset account. So it means that it's an asset under balance sheet item. On the other hand, we talk about revenue expenditure is the expenditure for ordinary repairs, well, and maintenance of the asset. All right. For example, if you purchase an equipment is an asset, but the cost for you to maintain the equipment, for example, the repairs, all right, the oil, for example, all those things are the revenue expenditure, and this will be recorded as an expense. So expense will appear in your profit and loss account. All right. So make sure that you know which one is the asset, which one is the expense. Capital expenditure versus revenue expenditure. Okay, then we have the depreciation that we are going to look into later. All right, when you purchase over the time, you have to allocate some kind of depreciation. So how are you going to compute the depreciation and how to record that in your book? Depreciation, normally we look into the costs, all right, that we have allocated. So example here is that when you purchase your cost, all right, you purchase, for example, purchase a building for 100,000, for example, yeah, 100,000 building, but then over the year you have charged a depreciation of, for example, 10,000 ringgit per year, all right, times by how many years? For 3 years. Okay, so it means that after 3 years, the value of the building now become 70,000. So this 70,000 is what we refer to the net book value. Net book value. So net book value is a cost minus accumulated depreciation. So talking about accumulated means that depreciation that you have incurred every year. So if 1 year is 10,000, 3 years is 30,000. So that is the accumulated depreciation. This accumulated depreciation is a contra asset. So we call it as a accumulated, all right, depreciation account. So it's a contra asset. So when talk about contra, it means that it's the opposite, all right, opposite account. So you're talking about building. Building is a debit entry. So accumulated depreciation for the building is a credit entry. Yeah, so it's a credit entry because it's a contra asset. It represents the portion of assets cost that has already been allocated to expense. So the cost of depreciation includes physical deterioration and obsolete. Yeah, so so this that's why you have to allocate some expense over the asset. So there are many methods of depreciation, all right, but we are going to use the straight line depreciation. So how to compute the straight line depreciation is that to identify how much is your expense per year. Yeah, so this expense per year is cost minus residual as value over years of useful life. So residual value refers to the salvage value sometimes. Yeah, we call it as a salvage value. So it means that at the end of the period, for example, if you have a useful life of 5 years, all right, but the salvage value means that after 5 years, you still can sell the asset for 20,000. So the cost is 100,000. So 100 minus 20, the salvage value over 5 years, then you get a depreciation of 16,000 per year. Yeah, because you're talking about years of useful life, so it means that the depreciation is per year. So 16,000 per year. But sometimes, all right, there are also assets that is depreciated based on a monthly basis. So look at what is the number of useful life in months. Months of useful life. So sometimes they have 240 months, 120 months. So it depends. So look into the question and whether it's a years of useful life or is it months of useful life. So if a month, then you have to depreciate on a monthly basis. But here we are referring to 16,000 per annum. So every year you're going to depreciate your asset by 16,000 ringgit. Example. Straight line depreciation. So this is what we call the cost minus residual value or the salvage value over 5 years period. You get 3,000 ringgit. In this case, 17 minus 2 is 15. Divide by 5, 3,000 ringgit per year. And this table shows you the straight line depreciation, right, for 5 years. So it means that the cost of the asset initially it was 17,000. Right, 17,000. But in the first year, you have depreciated 3,000. Right, 3,000 accumulated for the first year is 3,000. Second year, you depreciate another 3,000. Now accumulated becomes 6,000. Yeah, accumulated depreciation. So every year you're going to debit your expense, credit your accumulated depreciation. So this one is a debit entry. This one is a credit entry. So this one, depreciation is an expense. So that's why it's a debit. All right, this one is an expense account. This one is a contra asset account. Contra asset. But every year you are going to record 3,000, 3,000, but the accumulated depreciation now becomes 6,000. The following year, it becomes 9,000, then 12,000 and 15,000. So at the end of the year, you will have a 2,000 balance here because why 2,000 is the salvage value or the residual value. You have indicated that your 2,000 is your residual value. That's why at the end of the 5 years, you still have your 2,000 value of your asset. Yeah. So in this case, all right, you see that initially your cost is 17,000. In the first year, at the end of the first year, you have charged 3,000 as your depreciation. So your 7,000, 17,000 minus your accumulated of the first year is 3,000. That's how you get your net book value of 14,000. Then 14,000 charge for the second year, then you charge another 3,000, reduced to 11,000. So that's how you do it. All right. It's 17 minus 17 minus 9,000. All right. You will have 11,000. You see? 17 minus 9 is 8,000. Salah. Okay, it's here. Right, 17 minus, okay, it's like that. Yeah, so that's how you read your, how the cost of the asset will be reduced by the accumulated depreciation in deriving to your net book value. Right? And there are many other methods. For example, we have the depreciation for fractional methods, where you fraction the depreciation. Instead of you charge 1 year, in this case you charge for half year. So every 6 months you're going to charge. For example, initially it was, example, for 3,000 per month, but now every 6 months you're going to charge half of the depreciation. So instead of 3,000 per year, you're going to charge 1,500 every 6 months, and another 6 months for 1,500. So this is what we call half year convention. Okay, but and then you also have the other, what we call declining balance method. So similarly, this one is another method of depreciation, but we'll not go through for you for this declining balance. Sometimes they call it as a reducing balance, right? Reducing balance method. Reducing balance, right? So it means that it will take the reducing balance and then compute with the rate. Declining balance method example, and then we have, okay, under the financial asset, and under this asset, right? The estimated useful life is very subjective. It may differ from company to company. So the reasonableness of the management estimate, whether it's a 5 years or is it could be a 10 years period, right? Its estimate is evaluated by the external auditors, whether it's reasonable or not. If it's reasonable, then it's accepted. Otherwise, you have to do some adjustment. And in terms of the principle of consistency, all right, the law, all right, the financial regulation requires that the company should avoid switching depreciation methods from period to period. That's why if company is using straight line method, these are the method that will be used until the end of the useful life of the asset. Right, but if you have to change, we do not encourage that, because that is a violation to the principle of consistency. Right, but it's also possible for you to revise your depreciation rates. All right, initially maybe it's 10%, now you want to revise to 8%, or maybe you want to increase to 20%. So it depends on the company. You must have some kind of justification why you think that you need a revision of your depreciation rates. So if your justification is acceptable, then you can just proceed and do some revision on the asset. Okay, so I will not go very detailed on that. On the impairment of plant asset, all right, it means that if the cost of an asset cannot be recovered through future use or sale, the asset should be write off to its net realizable value. So how you decide on the NRV? It depends, again, net realizable value depends on how much is the value of the asset if you were to sell it, or how much people are willing to pay for the asset. For example, if the motor vehicle involved in an accident, all right, so normally the NRV will be depends on how much the insurance company is willing to compensate for the motor vehicle. So that will be your net realizable value. Okay. When you dispose of your plant and equipment, all right, you have to record the disposal, because you have to update, all right, on the disposal of the asset, because normally it will involve recording of the cash that you receive, because now you dispose your asset, normally you sell your asset. So upon selling of your asset, normally you will get some cash for the disposal. So we are going to record your cash, and then and then you are going to have a removal. All right, removal, you have to close the accounts accumulated depreciation. This one is debited. Why? Because remember, accumulated depreciation normal is a credit balance. So once you dispose of, you want to close, so you go to debit the account. All right, similarly, if your asset is the debit, but if you dispose, you're going to credit the account. Right, so these are the things that you have to do. First is on the receipt of cash, and then debit your accumulated depreciation depending on how much is the total balance of your accumulated depreciation. and then you credit your asset as well, because this one is reducing your asset. And from there, you will see that you have to look at the debit and credit side, total debit, total credit. But then you check if there is what is the balancing, balancing figure, whether the balance here will give a debit or credit. If it's a debit, then it's a loss. But it's a credit, then it's a gain. Why? Debit means that loss is an expenditure. So debit is an expenditure, so it refers to loss. Credit is a gain, so gain refers to a credit balance, revenue, isn't it? I say that like sekali. This one is an expense, this one is a revenue. So that's why credit and debit. Okay, so we look into the entries later. You know that if they say that if your cash is more than BV, record again cash. So that one we'll look into later. Okay, so let's look into this example. Assume that a machine costs you 10,000, had an accumulated depreciation of 8,000, book value of 2,000. So book value here is actually from this 8,000 minus 10,000 minus 8,000. Yeah, so this is your this is your net book value of 2,000. At the time it was sold for 3,000 cash. Right, 3,000 cash. Determine the gain or loss on sale. So in this case, if you refer to the normal understanding, right, the cost is 10,000, accumulated is 8,000, so the net book value is 2,000. Compare that with the 3,000, so it means that the net book value is 2,000. But you can sell and get cash for the machine of 3,000. So it means that from 2 and 3,000, you have a difference of 1,000. And when you look at this, when your cash received is more than the net book value, that's why you have a gain here, right? So that's why you have a gain on the sale of the machine. But if you were to put that into an account, for example, all right, how to record this transaction? You know that you will have to have a debit. Let me check that. You will have a debit. Just put a debit, and a credit, and a credit. So upon disposal, all right, disposal of a machine, how much was the cost of the machine is 10,000. So upon disposal, you're going to reduce the machine. So you're going to credit your machine that costs you 10,000. But at the same time, all right, you're going to close your accumulated depreciation. So debit your accumulated depreciation account. What is the value? The value is 8,000. Okay. How much you receive cash? Cash received is 3,000. So cash received here is you're going to debit your cash account because cash received 3,000. Okay, now let's look into this account. On the debit side, all right, you have 11,000, but on the debit side, you only have 10,000. So how can you make your balance, debit and credit balance? Means that on the credit side, you need another 1,000 ringgit. Then only it becomes 11,000. So when you have a credit entry here, so credit entry here, it refers to a revenue, and that revenue we call it as a gain on disposal. Right? So how you know whether it's a gain or loss? Then you have to look at the entries. The debit must be equals to your credit side. So the balancing balance here will decide whether it's a gain or it's a loss. Okay, so here example, put it together, cash of 8 accumulated, and then you have 1,000 as the balancing figure. In other example, all right, you may also have what we call disposal of an asset, but rather than you sell the asset, you trade in your asset. When you trade in your asset, it means that your old asset, you change that with you get a new asset, right? But then you use the old asset to reduce the total cost. How do I say that? You use that value of the old asset, all right, to support the payment of the new asset. So in this example, you trade in your used asset for new ones. Assume that Rancho Landscape exchange an old truck. So you have old truck, right? You have old truck for a new truck that costs you 25,000 ringgit. They received 3,005 trade-in value on the old truck, which had a book value of 2,000. Rancho pays the remaining 21,500. Why is it 25,500 for the new truck? Because the cost is 25,000, right? The new truck, but you already have a trade-in value of 3,005. That's why you only have to pay 25,500 ringgit balance in cash, all right? Because this value is the trade-in value. Rather than they pay you cash, they take the old truck and then reduce the value of the old truck, right, to reduce the cash that you have to pay for the new truck. Okay, so in this example, it was not given the cost of the truck, but later you see that, all right, they give you the cost of the old truck is 10,000, right? The cost of old truck is 10,000. The accumulated depreciation, okay, this one is wrong. Okay, the accumulated depreciation is 8,000. So you have the net book value of 2,000, fair market value. So this one is the trade-in value, right? The trade-in value is 3,005. So you have a gain on disposal of the old truck of 1,005. But how can you reflect this in your, okay, if you were to write down this, all right, I would see it like this. Okay, so I have my let me see. I will always have my debit, two entries for my debit, and will also have my credit side here. So the new debit, remember that the old truck is reduced. What is the cost of the old truck? The cost of the old truck is 10,000. How much the accumulated depreciation? Accumulated depreciation of the old truck is 8,000. Okay. And do I receive cash? No, I don't receive cash because it's a trade-in value. So rather than I receive cash, but I receive a new truck that cost me 25,000. Am I right? But do I have to pay cash? I have to pay cash for the new truck. So I have to credit my cash. How much I pay for the new truck? Only 21,500. Is there any other information? No. Okay. So let's look on the debit side. How much is your debit side? On the debit side, we have a total of 33,000. On the credit side, how much do I have? 31,500. So I have to add another credit. How much I have to add? I have to add another 1,500. Then only it becomes 33,000. So this 1,005 again is a credit entry. So you know that this one is what we call gain on disposal. How you know it's a gain? Because it's a credit. This one is a revenue. Right? This one is a revenue. That's why sorry, let me do it again. All right, this one is what we call gain on disposal. And why you know it's a gain? Because on the credit side is a revenue, so it's a gain. Yeah, so that's how you decide on the value of the gain or loss, depending whether the debit side or the credit side need to be added. So in this case, your debit side 33,000. Without the gain here, you only have 31,500. So you need another 1,005 to make it balance. So your debit side must equals to your credit side. Okay, so that's how you do it. Okay, so you'll see that in the account, for example, here, they have the same way of recording the transaction. So you have the gain on the disposal of 1,500. Because this one you have 33,000. Now you have 33,000 also because of the gain on the disposal of your asset. Okay, so that's done on the recording of you have the acquisition, you have the depreciation. So I maybe, okay, maybe I have not gone through on the acquisition of asset. So when you acquire an asset, let me see, for example, where is it? Okay, so when you acquire an asset, acquisition of asset, for example, here you have purchase of building of 100,000 by cash or sometimes on account. So it depends. So let's assume that the purchase of an asset is by cash. So you purchase a building. So building is an asset. So you debit your building. So in this case, debit your building. How much you debit? 100,000. Then you credit your cash or sometimes it's on accounts payable, depending on the transaction. So you credit on your cash or your accounts payable 100,000. So that is on the acquisition of asset. And then okay, so if you look into the T accounts here, all right, if you were to put into the account, you have two accounts. One is your building and the other one maybe is your cash. So building debit 100,000. Right, cash credit building of 100 because you pay cash for the building of 100,000. Yeah. Okay. The next one is that to allocate cost to the building. So let's say, for example, that the building that costs you 100,000, you have to look for what is the depreciation for the year. So assuming that you are using straight line basis, straight line basis, so the cost minus the residual value over number of years. All right. So let's say it's 20 years. Okay. Let's say that why? Okay, hold on. Give me some time. I will delete this. Okay. So cost over residual value, and this one is over number of years. So let's say the cost is 100,000 minus residual value. Let's say 0. Let me 0. And this one is over 20 years. So the depreciation will be 5,000 per year. Is it? Per annum. Per annum refers to per year. 5,000 per annum. Okay. So how are you going to record the depreciation? So depreciation is an expense. So you're going to debit your depreciation expense of 5,000, and you're going to credit your accumulated depreciation of 5,000 ringgit, right? So if you have a T accounts here, for example, you will have your depreciation. It's an expense. You're going to record that 5,000 and going to credit your accumulated depreciation of 5,000. Yeah, so this one is depreciation for the first year. So every year you're going to close your accounts. All right. So this one is your asset. This one also your asset. This one is your expense. This one is your contra asset. So when it's an expense, you're going to close every year to your profit and loss account. So you're going to close your depreciation at the end of the year. So transfer that to your profit and loss account. But for your asset item, you're going to carry forward the balance. All right, the balance for the building following year will be 100,000 as well. The cash here now depends on how much beginning. All right, maybe balance is beginning of the year, you have about 300,000 cash, let's say 300,000. But now you have credit, so it means that the balance left is only 200,000. So the balance that you're going to carry in the following period is 200,000. So this one will go, so in your balance sheet item, all right, you will show a balance of cash of 200,000. Assuming that opening balance, you have 300,000, and then you have paid for your building 100,000, so balance of 200,000. Similarly, for accumulated depreciation, you close your account at 5,000. This one will appear in your balance sheet item. So every year you will have a credit balance to your accumulated depreciation. All right, so at the end of the day, you should know how much is the balance of your accumulated. So for example, this one is for year 1, then you have year 2, year 3. So every year you're going to record 5,000, 5,000. So balance, for example, in year 3, you have a balance of 15,000. Okay, now, so you have recorded your accumulated. Then whenever you have a disposal of your asset, then you have to record your building and your accumulated depreciation. So how much is the disposal value? You should know lah. What is the cash received for the disposal of your building? So example here, all right, if you were to dispose your building, so you're going to credit your building account 100,000. Right, you debit your accumulated depreciation, assuming that the balance is 15,000, and you can cash out from the disposal of the building. For example, you get it for 70,000. Okay, what happened now? On the debit side, you have how much? Total here is 85,000, but here you have credit side, you have 100,000. So which side you need to add on to make that debit equals to your credit? You need to add on the first side, which is another. Here is 85, means that you need another 15,000. So 15 plus 70 plus 15, then you get 100,000. So instead of you credit the account, you're going to debit your account. How much is the debit of your account? 15,000. And this 15,000 is referring to the loss on disposal. How you know it's a loss? Because it's a debit entry. Debit entry refers to an expense, and that expense is known as loss on your disposal. Okay, so it's that simple. You just check on your debit side and your credit side and decide whether is it a gain or is it a loss on the disposal. So in this case, it's a loss because the debit side, without that, you have 85 and 100. So you add on another 15,000 on the debit side to make it your debit equals to your credit. Okay. So under IFRS, I mentioned earlier that what is IFRS? Let's go back to your slides on the IFRS. So International Financial Reporting Standard, or IFRS, all right, is the standard is being used internationally, right, including Malaysia. We have Malaysian Financial Reporting Standard that it says that if the company have an option to follow a revaluation, all right, process rather than continue to use historical cost, that is allowable, all right, provided that you have a good basis for you to revalue your asset. Yeah, so you can do a revaluation, call a valuer to revalue your asset and then do some adjustment. Okay, and the second part of the section of the chapter is on intangible assets. So I think that you can check what is an intangible asset. Is that asset, non-current asset without physical substance that normally provide an exclusive right or privilege. So normally we call it as patents, copyrights, leasehold, goodwill, right? So whenever a company acquire any intangible asset, similar treatment, debit your asset account, example, patent, and credit cash, how much you pay for the intangible asset. Similarly, we also have amortization, which is similar to depreciation, but depreciation is for tangible asset, amortization is for intangible asset. Yeah, so the similar on how to decide on the depreciation or amortization, depending lah on the cost of the. But you see that for amortization, right, the amortization expense is will affect your intangible asset value. All right, rather than having accumulated depreciation, that the account is expense off to amortization expense, but also reduce your intangible asset. Right. So for example, when you first purchase, you purchase certain amount, and then over the time, the value of the intangible asset will be reduced, all right, on a year-to-year basis, because it is cost of amortization is allocated directly to the intangible asset. Okay, so these are all the details about what it means, and right, and then we also have the natural resources. So again, we do have the depreciation as well. Okay, I think that you need to spend some time to go through all the slides, give you a further uh, elaboration on what we have covered today. So I think that's all for your this chapter on asset. I'll see you again inshallah in the next chapter. Assalamualaikum warahmatullahi wabarakatuh.